Hello everyone. After our market close on Friday, Nifty's top 3 weightage companies, HDFC Bank, ICICI Bank and Reliance Industries, all three released their quarterly results. Just for info, these three stocks together weighted about 31% on the Nifty index. So in this video, let's look at those first and then we'll discuss our regular pre-market report for today, 21st July 2025 for the Indian stock market in terms of Nifty and Bank Nifty. First, about HDFC Bank. If required, please pause and have a look. This is the Bloomberg preview estimation for its quarterly results. Here, year over year, Bloomberg expected the profit to grow 9%. In actual, the net profit increased by 12.2% to 18,150 crore rupees. So, profit-wise, it came above the analyst expectation, which is really good, but there are two problems. One, analyst expected the net interest income to increase 7%, but it was increased only by 5.4%. Then the second problem is, last year same quarter, HDFC Bank Management Board allocated only about 2,500 crore rupees as provision. And because Axis Bank results shown that the increase of bad loan last week, analysts were expecting HDFC Bank provision to increase reasonably like from 2,600 crore rupees to somewhere around 3,300 crore rupees. But to all surprise, HDFC Bank management increased the provision like crazy to 14,400 crore rupees. I mean, generally, if the management expects the bad loan increase means, then they will allocate the huge provision. So, banks increasing the provision in the stock market is always the red flag. However, HDFC Bank's asset quality was not that bad. I mean, compared to previous quarter, gross NPA increased very mild to 1.4% from 1.33%. Similarly, net NPA increased to 0.47% from 0.43%. Hence, it's not problematic like Axis Bank. And also, HDFC Bank management mentioned that they did not make these provisions based on any anticipation of bad loan increase, rather just as a precautionary measure. So, if market bought this explanation means, then it might react positively. If they didn't, then they might react negatively. So, in short, HDFC Bank quarter results were okay. We could say it's in line with the expectations. However, as we discussed, this increased provisions, which is a bit of worry, asset quality was stable and other income contribution increased to the net profit. And on the more share price influence side, management board approved a 1:1 bonus issue. So all the HDFC Bank shareholders will get each additional share. They haven't mentioned about any record date and they issued the special dividend of 5 rupees per share. So that's the overall summary of HDFC Bank quarterly results. Then coming to India's second biggest bank and Nifty's second weightage stock, ICICI Bank. If required, please pause and have a look. This is the Bloomberg preview estimation for ICICI Bank quarterly results. Here, net profit increased more than double the times of expectation. I mean, market were only expecting it to increase 6%. In actual, it increased 15.5%. And net income also, analysts expect to increase only 8% compared to a year ago, but in actual case, it increased 10.6%. Better net interest margin and much lower provision allocation than analyst expectation. And in fact, asset quality was also okay. I mean, gross NPA same as previous quarter, stable 1.67%, and net NPA mild increase to 0.41% from 0.39% a quarter ago. So in short, ICICI Bank's numbers were better than expectations on all the headline financials. In addition, their asset quality was also stable. No crazy provisions increased like HDFC Bank. However, on the negative side, ICICI Bank management said that they're expecting some net interest margin compression in the future Q2. So those were the takeaways from ICICI Bank results. Then moving to the third one, Reliance Industries, India's biggest company. As usual, if required, please pause and have a look. This is the Bloomberg consolidated preview estimation for Reliance Industries. Now coming to actual, market was expecting the revenue to drop 7.5%, but in actual it was down 6%. So it's okay. But the problem is EBITDA and EBITDA margin. Compared to last quarter, market expected the EBITDA to increase 1.5%, but it was down 2%. Similarly, market was expecting EBITDA margin to come 18.4%, but it came only by 17.6%. Here, on the positive side, last quarter EBITDA margin was very poor, 16.8%. So compared to last quarter, it was an improvement, but it was below the analyst estimation. Despite all the above headline financials, market was expecting the net profit of roughly 19,800 crore rupees, but Reliance Industries posted the profit of near 27,000 crore rupees. Here, this huge profit increase was mainly due to the sale of Asian Paints shares. Anyway, if you see the segment wise, only digital revenue increased 3% sequentially. All other segments, retail, oil to chemicals and oil and gas, all revenue were down between 5 to 7%. And only digital profit and ARPU, which was 208 rupees per share, comes in line with the expectation. All others came below the expectation. I mean, this is the Reliance GDR reaction while the results was announcing. This itself sums it up very well. Due to the extraordinary net profit announcement, GDR price increased from $68.8 per share to all the way above $70 per share. But as soon as the detailed segment results released, then the share price dropped down to $68.9 per share. So in short, market was confused about the Reliance results since digital is the growth sector which is performing well, but the other core sectors are not doing great. That said, those were the quick takeaway from the Reliance Industries results. So based on how market reacting to these three results will define the today's market momentum. Additionally, if there is any development in the India-US trade deal means, then that could also influence. Anyway, now moving to US market. Friday, there was an increased fear of trade war as Trump is looking to impose tariff of 15 to 20% for all the imports from Europe to US. However, on the positive side, one of the FOMC member, Christopher Waller, calling for the rate cut in the next FOMC meeting as he cited that this Trump tariff indexed inflation will be just a one-off event but not the persistent one. So in the end, US market closed flat. I mean, Dow Jones was down by 0.32%. On the other hand, both S&P 500 and Nasdaq closed flat. In case of VIX, it's still around 16.5. So clearly, global momentum was not good. Other than that, on Friday, both FIIs and DIs were net buyers. FII net bought for 370 crore rupees, whereas DIs net bought for 2,100 crore rupees. Then, if you see the participant-wise open interest, compared to Thursday closing on Friday, retail traders reduced their positive stance slightly and property traders reduced their negative stance slightly. I mean, on Thursday end after the weekly expiry, client or retail traders had net 12.9% open interest on the bullish side. That at the end of Friday closing, it dropped to net 10.8%. Similarly, property traders from net 7% open interest on the bearish side, they reduced it marginally to net 5.3% but still on the bearish side. Whereas FIA case, they are maintaining their net 5.5% open interest on the bearish side. So based on the existing position, because retail traders were net sellers in both call and put options, they inclined towards range bound actions with a positive bias. On the other hand, both FIIs and property traders were net buyers on both call and put options, meaning they inclined on the breakout on either side with a negative bias. So each group has different expectations, only time will tell who is correct. As a summary, US market closed flat and there was a confusion among investors that what Trump will do kind of. So global momentum is nervous. In line with that, on Saturday morning, GIFT Nifty closed at 25,010, equating that with the spot market. For now, it's indicating flat opening with negative bias. However, both HDFC Bank and ICICI Bank results were released after the GIFT Nifty Saturday closing, so it's not representative. Then, in addition to HDFC Bank and ICICI Bank, other banks such as Yes Bank, Union Bank of India, AU Small Finance Bank, Punjab and Sindh Bank, Bandhan Bank, Central Bank of India and RBL Bank, all those banks released their respective quarterly results during the weekend. So, we could expect all those stocks will be on focus today. About the things to look out, Ultratech Cements, Havels India, IDBI Bank, Andhra Cements, PNB Housing Finance and UCO Bank are some of the major Indian companies whose earnings results are still released today. And in terms of macro, before our market opening, Chinese interest rate decision is due. Then after our market close, India's infrastructure output growth are some of the important things we need to keep an eye out today. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the algorithm and also motivate me to do more. Please don't make any investigation based on this, as not a SEBI registered advisor. I am doing this for me and viewers educational purpose only. Thanks for watching.